Well, welcome to the recorded section of tonight's program, and we're going to start going through the different aspects that you as a parent or a financial or college planner need to consider for your clients. So we take a different approach. Most parents and students are really focusing on the admission part, but when you look at graduation rates and the cost of college and the debt that's being accumulated, we think we need to have a transition to focusing on the outcome. It is a very highly emotional decision, probably the most emotional decision a parent and child will make is from an expense standpoint. Yet the schools provide limited money discussions, and many families try to avoid that, hoping they're going to be able to pay for it once they get the award letters. And there's a recent article this weekend, actually, from Sheila Bair, the former FDIC chairperson, and talked about the lack of transparency of being a big contributor to the student debt crisis as we see. And again, it's for prevention of the problem, which is one of our goals as a company. And we're seeing this in a multitude of different places. There's been a series of studies, two of them I'm going to quote here. One that was done about 2 years ago. About 54 to 70% of millennials would have made a different decision. A more recent study that was issued out by Citizens Bank said about 70% of the millennials would have made a different decision if they had had the financial information. And I think that's what we're trying to do here with our approach, our analysis, and simplifying the process from a financial standpoint, which is typically not available. And it's that transparency, I think, so important in the process. I think the first step of understanding the transparency is understanding the true cost of college. What is the value of the education? Looking at graduation rate, transfer rate, debt at graduation. What's the true net cost that you as a parent or a student may be facing? The schools will only give you information 1 year at a time, and by taking the initial award letter, which we're going to see in a few more minutes, and multiplying it by 4 can be very misleading, again, based on the complexity of how the award are distributed. There's been other studies that there is no standardization at this point in time with the award letters, and this becomes a problem because it's not easy to compare award letters side by side. I think that's another advantage with the approach that we've developed here. It does standardize and lets you compare information side by side. I think another issue that many families face is understanding the timeline. And again, we'll see this in a few more minutes of how the impact of multiple children in school, if you have that situation with your family timeline, and how that can make it positive and or negative, again, based on the type of award you receive in the award letters. With that being said, you're seeing transfer rates now approaching 35%. You look at the national graduation rate, it's under 40% after 4 years. This is all, again, due to not understanding the complexity and the true cost. And what we think we've tried to do is help families and students better understand what they'll be paying over the 4 years or till graduation. And everything's customized to you of how you're going to pay it. So you may have the same cost, but maybe one family has saved more, maybe one family has better cash flow. It's how you're going to pay the bill, which is now going to dictate the student debt structure, which will then drive your child's financial future. So I wanted to show you a picture of what the goal is and how we present this. Once you get your award letters, you key your information in. We're going to see this in more detail in a second or two. And we then take that information and project based on your family timeline, how the award letter is structured, what your financial strength is, how much can you pay, how much you have saved, and project what your debt will be at graduation by school based on what they've received, and then sort that by the most cost effective. Now, the cost effective may not be the cheapest. And what I mean by that is if maybe a school has a better graduation rate, or you feel your child will be doing better in a school where it won't be in a classroom of 400. This is where you need to take the personal level and at least know what the value proposition is, because the best way to save money will be to graduate on time. And let me discuss that as an example. If we pick a cheaper school here, say a state school would typically be there, and your child's there an extra year, and say it was a $30,000 net cost, well, that wasn't a $30,000 mistake. That was an $80,000 mistake, because now that child has forfeited a year of employment. So you have the $30,000 expense plus the $50,000 that maybe they're being employed at, gives you what that error was or mistake by just trying to pick that cheaper school. So again, finding the best school for your child, not just from a financial standpoint, but from an experience and from an economic and graduation is very, very important. Here's some of the other issues that you face as a student, as a parent, as an advisor, is the schools have gotten to be a la carte. The cost of attendance is not always stated, especially for the state schools. A lot of the state schools are highly dependent on the state budget and will not have their true net cost until sometime during the summer. But you need to project what that's going to be. As I said, more and more schools have gotten to be a la carte on their cost structure. What I mean by that is, the major of pre-med versus business may have a different cost and fees. You also have to look in, the different boarding options you may have. You may be in the dorm versus the suites, or the meal plan you select. All these decisions can, move your number by thousands of dollars that you don't see. And again, the schools will give you general numbers, but you need to customize that as best you can. In the cost of attendance is your tuition and fees. Now, also be really careful when you get the initial award letter and or the bill. So you won't get that bill until you commit to the school sometime in the summer. But more and more schools are adding a health care expense. Now, that's if you don't have insurance. So you need to pull that out in many cases. As I mentioned, the room and board can vary greatly depending on what options you're picking. Your books and supplies, these are typical averages across the board, and you need to customize these. And a lot of times these are understated. So this is a risk that you have where you think you have your budget put in place and then your book fee is a much higher number than you anticipated. And then also your travel and personal expenses. In many cases, these will be included in the cost of attendance when the school figures your numbers out. And then you need to customize those because in many cases they are averages. An example would be expenses, but I'm living in central Pennsylvania versus having that same personal expense. Could be the same number, but I'm going to be in New York City. That may not be an equal example for you as when you try to actually live that way. Here are some of the things you need to be aware of on the cost of attendance that are not there. So again, what I just talked about is personalizing those other expenses. I mean, you can get pretty close on the tuition, room and board, and other fees like that. But those personal expenses, are you going to be traveling back and forth home more often? Is it an expensive place to live to go out and get, food or, go out and see a movie? The additional travel, so the schools will typically allow you to get back and forth once during the semester and up and back during the year. So that is also an issue that you may have if, you have to come home for more, personal reasons maybe or something like that. Another cost that's not in there is the parent's expense to come and visit. So those costs are not part of your cost of attendance, and they need to be factored in outside of the cost. So if you've moved further away from home, your parents come to visit, they'll probably need maybe airfare or maybe a hotel stay. Versus if they're within driving distance, maybe they can come up and back in a day. That cost would be minimized. And also an important part for parents and students as they go through the process is evaluating how do they get home in case of emergencies. What is it going to cost? How much time does it take? What's the process? And I would tell you, seriously evaluate that because things like that do happen, which could cause problems for the student to get back. Now, the next part of after we understand our cost of attendance, we need to look at what type of scholarships we may receive. So there's two types. You have merit scholarships, you have need-based scholarships. A merit scholarship is not based on financial need. This is, a student has some special talent or they're looking for some specific things that student's going to bring to the school. So money is not part of that process. Yet we would recommend that every family still complete the FAFSA form for a variety of reasons, such as your debt structure or now that you're in the award section, telling the school that you have the ability to pay. Why schools give out merit and a lot of parents are frustrated that maybe a richer child is getting financial aid. Well, maybe that child has higher SAT scores or they're looking at a specific major this year that they're trying to fill seats in that and your child's not in that same category. This also creates the demand for upcoming students to come in here where they see that higher GPA or they see the type of students they're recruiting. It drives future demand. So that is one of the inequalities that you may see or face that can be discouraging for some parents. What you need to understand also when you get a scholarship from the school, if it's a recurring scholarship, traditionally there'll be an additional letter coming from the school stating that total award. So this means you would get a $40,000 scholarship and it would be dispersed $10,000 per year. In that letter, though, there'll also be additional requirements, and you need to have that discussion with your child stating that, okay, you need to maintain a 3.3 if that's what the guidelines are. If you don't get the 3.3, the school has the opportunity to dismiss or prorate the remaining part of the scholarship. So if I get a 3.0, maybe they're going to take that $10,000 and reduce it to $7,500. These are options that you need to at least discuss with your child. It could go to zero if you don't get the required GPA. Outside scholarships, again, recurring, they may have requirements. Typically they don't, because it was earned because of another reason. But you have to understand, if you do receive an outside scholarship, is it a recurring scholarship or is it just a one-time scholarship, one-year scholarship? Now, what is important to realize also with outside scholarships is that will be reported to the school, or they will receive that notification. And if that scholarship impacts your need-based financial aid, you could lose dollar for dollar. Now, it will have to exceed the amount of need. So an example, if I have $15,000 of need and I get a $12,000 scholarship from the school and another $1,000 scholarship from an outside resource, then it probably will not have much of a difference. But if I received a $5,000 scholarship and my need was 15, and now I have $17,000 of scholarship money between the school and the outside resource, the schools will typically make an adjustment. So again, be careful of how that's going to happen for you. Then we come to need-based scholarships. This is based off the FAFSA form and your EFC. And if your school is using the independent methodology, the most common is the CSS profile. This is going to be based on your financial aid positioning. So, when we talked about this in the paying for college, it's cost of attendance minus my EFC gives me what my need is. And then each school will meet a percent of that need. And then the next piece will be, so much of that will be gift aid versus self-help. Now again, this will vary school to school based on the requirements they're looking for. Maybe it could be the major you're considering, or they're looking for first generation, or they're looking for specific geographics. Again, this is where some of the inconsistencies will happen. But this will be based off your EFC calculation, which can move up and down. And this is where that family timeline comes into play that we discussed earlier. You also see grants and need-based scholarships within this area. And typically they are determined by the financial aid office of that school, and the guidelines that are given either through the government or through the state or some other institution. So typically this will be controlled or managed by the financial aid office at each of the colleges. And you could see inconsistencies, and it could be a function of what state you're looking into, or the money allotted to that school. It could be a problem that you could see inconsistencies from school to school. Again, this is where the scholarship terminology becomes a problem. Some of the award letters will just state that it's a scholarship, and you're trying to compare apples and apples. And one school may have put scholarship there and it's a merit scholarship, and another school puts it as a scholarship and it's a need-based scholarship. You need to ask that question. You have to understand the difference is a need-based or a merit-based scholarship before you start comparing. And also in the need-based section, you're going to see the student loans and also the federal work studies if you qualify for those programs. So here's an example of a typical award letter. This is for an undergraduate or dependent student. We're seeing the estimated cost of attendance. Here again, we just cover those line items. You need to work through those details. These will typically be the averages, and you need to customize your award letter. And that customization on decisions sometimes doesn't happen until the summer. You go back and visit, once you've committed to the school. But I would recommend that you try to build this as best you can to make sure you make the right decision. Also, the awards will be broken up. You're seeing the annual numbers, but an important part here is the awards will be broken up by semester. In this case, we can see there's a spring and fall. And you see on the right-hand side also, you see this is that second award where you've committed to accepting that. And in some cases, you may deny or not want something. So an example is work study. So you received a work study allotment, and maybe you're saying, well, I don't want to look at I want to concentrate on my academics. I don't want to take the work study. This again would have an impact on your net financial cost of the school. So now we start building it within the Pay for Ed solution. We start building our cost. Now here's the customization we allow you to do, and we think it's really important. The columns in the boxes are our estimates. So this is what we think we'll be paying, and what you see in the column right before that is the current cost of attendance. Now, as I said, For some of your state schools, they won't issue their cost of attendance because they don't know what it's going to be, but this will at least give you a guideline of what you can expect or what you should be basing your inflation onto those numbers. So here we've kept it pretty simple, but again, we talked also about the other costs such as your book fees and personal expenses. These need to be customized to you in each case for each school. Then the next portion is understanding, as we just described to you, the merit part. And if you notice, we've separated the merit scholarships from the need-based scholarships because one will not fluctuate in most cases, and where the need-based scholarships and grants will fluctuate year to year. And it could be a function of your EFC number going up and down, or the program themselves change because there could be a reduction in, say, state funding or the federal funding that may reduce the eligibility for that, or the amount of money that's going to be allocated towards that program. So this is where I had mentioned that sometimes you get your award letters and it states just the scholarship. It is absolutely critical that you go back to the school and understand the type of scholarship you've received so that you can see if it's going to be a variable amount or a fixed amount, and also the guidelines to maintain that scholarship. A critical part that's often overlooked. We get all excited about the term scholarship, that it's free money, but this again supports the reason why you need to look at it over 4 years and not just 1 year. Then we move down to what we call the self-help section. So this is your other loans and work studies, and again, this can be a very frustrating piece, and it was part of the Shield-Bear article. The terminology here, we look at the net costs, and probably the biggest issue that many of the schools will do is put a Parent Plus loan into that, and it makes the net costs very misleading. So again, here's where, if you notice in our self-help, we do not have the Parent Plus loans. In some award letters, you will see that, and it should not be added in as a line item or a part of like other loans. The Parent Plus loan is really a portion of funding your shortfalls and not part of the actual award. So once you have the details, now you understand the terminology, understand how you need to put it in. Once you have it, and our approach is looking at it over a 4-year basis. So here we receive that $24,000 merit scholarship. If you notice, it's consistent over the 4 years. We're looking over 4 years. Now, what you don't see in the input here is that there is a change in years 3 and 4 where the costs start going up and the award letters will not cover everything. There's that green section. It's called the financial gap. This is due to what the school meets of need and how much of it's gift aid. So we consider understanding what you're going to be paying over the 4 years is critical and helps you project and eliminate the risk of excessive student debt, because the schools will only give you information 1 year at a time. But we think the most important part of our approach is understanding your how. So we talked about this earlier in the program in the sense that you need to understand your how. How are we going to pay for this? I have money saved. I don't have money saved. We can afford so much per year because our shortfalls will then dictate what loans we take, and the type of loans we have will dictate our repayment options. And I think that becomes the biggest issue, because in many cases, the access to the funds are fairly easy, but then we don't face the repayment until our child has graduated. And that's where, again, we're seeing the millennials react to that. Is now they're 24, 25, 30, and they're still, paying back significant student loans, and now they can't buy the car, buy the house, start a family, those type of decisions, because we made decisions when they were 20 that impacted their financial future. By looking at this on a more holistic basis, you now can project, or at least minimize the risk of them making a wrong decision early in their career that will impact their financial future. So understanding both the what and the how are critical to both you and your child's financial success. So now once we have that information, we then can see all our numbers side by side and compare them and see where the true value is. And as I said, there may be significant reasons why it may be more beneficial to pay more for a school. Just like we buy a house in certain neighborhoods or we buy a certain car, there's benefits that we get. We can always just buy a car. It's going to get us to the same point. It's really just how do you get to that point. But just don't look at the most cost effective. You need to factor in the other things that are going to help your child. Maybe the strength of other majors they're looking at. So they get in, 50% of the students will transfer. So maybe your child has a very diverse direction, and the school offers good programs in both directions your child's considering, versus One may be just stronger, and if they now change their major or they get into that program and it's not what they expected, this is where, again, staying in that same school will minimize your transfers, which then minimizes your risk of credits being lost in that transfer. Again, if you understand this as a purchase and a business, we hopefully will help you make a better decision. So once we have all that, as I said, our goal is to help you on making the best financial decision. This allows you to focus on the non-financial items and see what the true value will be by putting all of it in one place and see where your net cost is going to be, what your debt's going to be at graduation by college based on where you've been accepted and the type of award letter you received. Again, colleges only provide you 1 year at a time, and that can be very misleading. In the next slide, you're going to start seeing the different situations where you need to be prepared, and by looking over the 4 years and how we do it, you can get a feeling of the mistakes or issues that many families are facing because of that lack of transparency that we discussed earlier. And the financial aid reason is the biggest, and that comes into two places. I think, one, it can be misleading. The schools, we get into a situation, as I said, it's very emotional, but also a lot of times students aren't ready. So, that merit scholarship where they needed to get that 3.3 and they got the 2.7 or the 2.8 or the 3.0, and that $10,000 or $15,000 scholarship comes off the table, then that puts that school, in a much different financial picture in years 2, 3, and 4 to graduate on time. Again, each situation is going to be different, but these are the things that you need to discuss because it is a lot of money and will impact their lives going forward. So here are the situations of why you need to look at it over the 4 years. So this is an example where we're looking at the oldest child, and now they have a second child that's going to come on board. And if we looked at the first year, the school maybe not be that attractive to us, but because we have a second child and we're looking over 4 years, and if this is the best fit for our child, we can see that we're going to qualify for more aid in years 3 and 4 because that second child's going to come on board. Our system uses the school's historical gifting policies, but we actually take the award letter as it's structured and project out based on is it a merit scholarship versus a need-based scholarship, and project out what our net cost is going to be using that process. So here's a great example where maybe our top choice isn't attractive and we're only taking that first year and multiplying by 4, where if we really took the detailed analysis, we can see that maybe the school becomes affordable and is a better fit financially, both on an academic and financial basis. Here's probably a bigger risk that happens for more families, especially if this is the second child going through. So the first one we just saw was the oldest child and the second child coming on board. Now we see a second child that's coming on board, and the award letter looks extremely attractive in that first year. What we don't see, or the schools are not able to prepare for you, is that oldest child, or the reasons why you received the need-based scholarships, was because you had 2 in school, and now your EFC number is going to go up in the future years. So here, this is where that oldest child come in. If we expected we were going to get about $19,000 a year in financial aid and see that it's going to drop down to 6, that's $13,000 a year that is now out of pocket, which could make the school prohibitively expensive. Again, by seeing it here and seeing the numbers, again, we're using the school's historical gifting policy and the type of award letter. So in this case, the $19,000, a portion of it at least, was need-based because it changes going out. If it was a merit scholarship, we would have seen that flat line as we saw earlier. But again, this is where multiplying by 4 is not always the best decision, and having the detail allows you a better decision. Here's something else that does happen. It's something that we run across periodically, and it's just something you need to be aware of. As I said, this is a business, and schools are trying to fill seats. So you need to understand that. It's not as clean cut as you would think. And also on the award side, it's something I want to mention. You have to understand, as I said, they're a business, and they're trying to fill seats in certain specific areas for a variety of reasons. So, and this gets into the inconsistencies that you may see. So you maybe have a neighbor down the street that got into school, and you think your child's smarter, and they got $10,000 of scholarship, and you're thinking, oh, we should get 15. Well, you don't realize is maybe that year the child got that scholarship, they were looking for that specific type of child. They applied to that school. Maybe they came from they were first generation. Maybe they were, applying to a certain major where your child is different. but we generalize that that school is going to give us this much. You need to realize it's called enrollment management, and it's actually a very complex matrix of how the schools determine what they're going to give out each year. So it can change for your child. Here's called front loading, where this family received a significant award. It was need-based, and there was no guarantee. So what happened in year 2, the schools readjusted that number, and now they went down to the 8,400. This could be a substantial surprise, again, resulting maybe in a transfer, but then you get emotionally tied to the school. Now, in this case, in years 3 and 4, it goes back up because that second child comes on board. But these are reasons why, again, you need to look at it over 4 years. And in this case here, this would warn the family to say, okay, let's go back to the school and ask them, how much of this are we going to be guaranteed in future years if this is our top choice school? And some schools will commit and say, oh no, this scholarship's good for all 4 years, even though it's need-based, and some schools will not commit to that. So that's a risk that you as a parent or as a student or as an advisor need to address with your clients to make that best decision for your child. So after we now have our numbers, and maybe there's a situation where we want to appeal the financial award, what do we need to do? How do you go back and qualify for more financial aid? Asking the questions. More and more schools have a formal process, a letter format or an online form you need to commit, and maybe attach documentations. Be really careful about what you put in those documents, as far as the attachments. In many cases, it will include your social security number or maybe your birthday, so be very careful on where that information goes. Remember that the financial aid director's office gets hundreds, if not more than those, in a day. Remember the reader when you're writing your appeals or how you're going to write this. It is my belief, one, you should write them to be very short, 2 to 3 sentences per item, and it's best if you can attach numbers to that. So an example would be, I just got laid off, or last year's numbers reflected I was making more money. You need to say, okay, we have had a reduction in income, and the reduction of income is X. Now, as part of that process, even though it's using a base year that's already completed, if you have not completed your taxes of the current year or have justification to show that to the schools, you need to find that. So let's say your taxes for the base year were submitted, and in the following year, your income, you got laid off. You need to get your taxes done because of prior, and get your current year taxes done as quickly as possible, which would justify your appeal. And these are things that you need to be able to do and be ready to submit. But again, be careful where that information or what's on those forms as you submit them. So I said, here are some reasons why you need to appeal. Again, with prior, we're looking at quite a difference in time. A lot of things can happen in people's financial life, such as change of jobs, you get divorced, someone, God forbid, to die. These are all items that may happen that you need to address. A loss or reduction of income, maybe you had a really good year in sales, maybe you sold a business, could be examples of why that needs to be addressed. Maybe there could be an increase in cost that is not financially shown on your taxes. So maybe you're supporting an elderly parent. You may need to show them documentation where that would be applicable. I have a major medical bill. These would be all types of issues that help them to look at things. Now, you also may be looking at comparisons of financial awards. So I received a $10,000 scholarship at this school. I received nothing at this school. Again, you can raise those questions. And a lot of times there are inequalities. Some schools will react to that if it's a similar type school. So, you received a $10,000 scholarship at a private institution that's $60,000. And now going back to the state school and say, well, I got $10,000 there, but that's a $30,000 school. You're not going to get that $10,000 scholarship from the state school because you have the price differential there. Again, that becomes some of the issues that many of you will face, which can be frustrating, but it's just part of how the process works. So once you submit your information to the school, the financial aid office will respond to that. The reaction to that, if you get additional monies, is called professional judgment. So they're overriding the information that's provided that's required. So again, most of the money that will be distributed will come from the federal government, a good portion of it, especially on the need-based side. And if the documentation, such as your taxes, don't support the change, the school or the financial aid office has the right to override that because you've supplied them with the proper documentation. It's called professional judgment. So this is what you'll be looking for. It may not be the same number at each school. So maybe a school is using a different EFC number. One uses an institutional methodology versus a FAFSA number. So just be careful you don't expect the same results from each school because of a variety of reasons. As I said, besides the award letter, you may want to submit a letter and other information. So again, I would recommend, if you are appealing, to have your most recent taxes or your most current pay stubs. Would be very helpful on recognizing or submitting your request for new numbers. Remember, each year your numbers need to be submitted via the FAFSA form and sometimes the CSS profile. So again, each school will be different on their process, that you may be able to get adjustments in outer years. There's a process called verification. Now, some schools with DRT are doing it sooner, but what we mean by verification, the schools will typically not go through the process of validating the information in your award. So the award letter you received is assumed that the information you submitted was appropriate and correct. If most times when you've completed the FAFSA form, you have the option to turn on what's called the DRT switch, the data retrieval tool within the IRS and FAFSA process. Now, that is a direct link from the IRS, and what happens on the college side, the financial aid director side, a flag gets set in your FAFSA that says this information was transferred from or validated with the IRS information, and you don't have to worry about it. Now, if you are unable to use the DRT system for a variety of reasons, you may need to submit, again, the paperwork, and then that's the verification that will be required. The CSS profile schools or the institutional schools often require you to submit multiple years of tax returns. Again, you need to address that with them. But again, if you have not completed the DRT process within the FAFSA form, I would highly recommend that you get that done also. Again, in some cases, the DRT can be frustrating. It needs to be a direct match of your 1040 heading, as an example. So if you have an amended return, it's not going to be available. But now, if you have ST as an abbreviation and on your 1040 it says street, then you're going to have street on the FAFSA form. So that's how it needs to match it up exactly as they have it. Also, if you don't have that information, the schools may require you to get the tax transcript, not just the tax return, because some people have been, will submit two pieces of paper. So tax transcript can be requested from the IRS and can be sent from the schools. Remember, about 30 to 100%, depending on the school, will validate or verify the financial information. As I mentioned already, the CSS profile does require paper submissions, and it can be done either by paper or, depending on the school, most are using what's called IDOC to submit that information. And as I mentioned earlier, getting your most current tax return, if you're going to go through the appeal and there is a substantial change, I would recommend you try to get your taxes done as soon as you can as part of your appeal process to justify the changes that you're asking for. So that concludes the recorded section. We're going to go back to the live section and answer all your questions, and hopefully you've been typing those in to the chat box, and we're gathering them up, and hopefully we'll do the Q&A. So we'll see you on the live section.